Small and medium enterprise (SMEs) have experienced many economic development since 2005. The National SME Development Council (NSDC) has been the highest policy-making authority with its strategic functions that embody the overall development of SMEs across all sectors of the economy in Malaysia. SMEs can be defined based on two criteria. First, based on the number of employees, and second, based on the annual sales turnover. The business needs to satisfy either one of the criteria, and if the business fulfills both criteria, the smaller size will be applicable. SMEs are important and relevant to a few Sustainable Development Goals (SDGs), which are SDG 1, No Poverty, and SDG 8, Decent Work and Economic Growth. In this video, we will be explaining 5 important discussions that are related to the development of SMEs in Islamic-based transactions. 97.2% of total businesses in Malaysia have proven that SMEs are the backbone of the economic development. They have contributed significantly to the GDP, employment, export, and productivity of the country. SMEs' GDP is easily adapted and quick to change in a crisis due to their small size and simpler structure. The growth of SMEs' GDP is higher than the overall GDP and the non-SMEs' GDP. SMEs also create big employment opportunities, especially in this generation, where most jobs require digital expertise. This will contribute a lot to innovation and at the same time reduce poverty issues in Malaysia. As of 2019, SMEs have recorded positive growth in export despite the fact that Malaysia was facing weak external demand. The main drive of the export is coming from the service and manufacturing sector, led by tourism-related industry, machinery, and transport equipment. SMEs are important for the country because they contribute to the productivity level of economic growth. An increase in the productivity is included among the main pillars under the 11th Malaysia Plan. To improve productivity massively, technology is encouraged to be adopted in a few sectors, highlighting entrepreneurs in the service sector. To ensure the continuity of the economic growth contribution of SMEs in the next few years, private sectors are encouraged to adapt to changes and have a pool of skilled labor that can be absorbed in the market. There are 3 characteristics that differentiate the Islamic-based SMEs from the conventional SMEs. First, principles and governance. Conventional SMEs adhere to a Western worldview and have no specific religious guidelines for governance. As for Islamic-based SMEs, they are adhering to an Islamic worldview based on Quran and Sunnah and are governed by the Sharia, which is the Islamic law in various aspects, such as business operations, ethics, and financial transactions. Second, ethical consideration. Conventional SMEs may have their own set of ethical standards and are not bound by religious guidelines. Meanwhile, Islamic-based SMEs have to adhere to a set of ethical principles derived from the Islamic teachings. According to Sharia, Islamic businesses are prohibited from being financed by any financial institution that involve usury or riba, and involved in the presence of the element of gharar and maisir. These principles promote fairness, justice, and social responsibility. Third, financial transactions. Conventional businesses rely on interest-based financing, loans, and conventional banking services. They conduct interest-based business and make interest-based investment. Allah described in the Quran in Surah Al-Baqarah verse 275 to 280 about the prohibition of interest or riba. Hence, Islamic-based SMEs focus on generating returns through Sharia-compliant tools such as profit-sharing arrangement, mudarabah, partnership-based financing, musyarakah, and asset-based transaction, ijarah. On 2nd May 1996, Malaysia established a specialized agency known as SME Corp Malaysia and was placed under the supervision of the Ministry of International Trade and Industry, MITI. In 2016, Sharia-compliant SME financing scheme SSFS 2.0 was introduced to develop SMEs and agreed to pay 2% of the profit rate charged on the financing provided by the Islamic financial institutions. The financing will include working capital, asset acquisition, and upgrading of businesses. 14 financial institutions such as Maybank Islamic Berhad, Bank Muamalat, Bank Islam Malaysia Berhad, RHB Islamic Bank Berhad, and other banks agreed to participate and offered two categories of financing options in order to help and develop SMEs. First category is asset-based financing that consists of 5 products which are murabaha, ijarah, salam, arman, and tawaruk. But in this video, we will only focus on 3 products. Murabaha, contracts where SMEs could request the bank to purchase certain assets on their behalf and later the bank will sell back that particular assets to them. Even though some people question the legality of murabaha as it is quite similar to riba, the Institute of Islamic Banking and Insurance (IIBI) already cleared out the misunderstanding. Thus, the SMEs should not be afraid or hesitate to apply for murabaha financing since it is Sharia compliant. By using murabaha, the SMEs also could choose deferred payment, which will be more beneficial for them. Ijarah, SMEs also could go for ijarah or Ijarah Muntahiyah bin Tamlik (IMBT), a special leasing contract where the leased asset will be acquired by the lessee permanently at the end of the leasing period. The process begins when SMEs identify the assets that they want to acquire. Then, they need to engage with the bank and request for IMBT, and the bank will then fulfill their requirement by purchasing the assets that the SMEs want. The SMEs need to complete their rental payment based on the agreed period, and at the end of the leasing period, the bank will transfer the legal title to the clients, which is SMEs. Ijarah could help to develop the stability of SMEs since it offered competitive pricing compared to conventional leasing. Arman, a short-term loan where gold or other valuable metals will be pledged as security or collateral for the loan. There are 3 main concepts of Ar-Rahnu, which are Qardul Hasan, Al-Wadi'ah, and Al-Ujrah. Ar-Rahn will help SMEs to receive instant cash with a competitive profit rate and minimum eligibility requirements. Second category is equity-based financing that consists of two products, which are Mudarabah and Musyarakah. Mudarabah, a trading partnership where the capital will be contributed by the capital provider Rob Al-Mal and the entrepreneur Mudarib. Musyarakah, it is said to be more practicable and realistic compared to Mudarabah. In Musyarakah, the financier or bank will contribute most of the capital, while the entrepreneur SMEs will be managing the business. The profit and loss sharing ratio can be decided by the partners on what amount they agreed, and it is not necessarily equal. First, lack of knowledge and awareness regarding Islamic banking products and what products may suit their requirements. SMEs are generally unaware of Islamic financial products that suit their needs given the complexity of Islamic financing models, since they have not been properly informed by sources like the media and the internet. Second, misunderstanding due to the absence of promotion, instructions, and structure that has to be supplied by all relevant parties. There is a misconception about Islamic financing facilities among SMEs in Malaysia. Thus, the access to finance of SMEs provided by Islamic financial institutions become complicated when there is unclear information and awareness among the SMEs. Some of them still have the misconception that Islamic finance is dedicated only to Muslims. Third, higher cost of credit than conventional financing in the same sector. Most SMEs have either limited or no access to credit. The expansion of SMEs is constrained by combination of demand, supply, institutional, regulatory, and other policy issues. Fourth, higher probability of rejection. Lack documentation, insufficient cash flows, and half-baked business plans may increase the possibility of being rejected. The absence of appropriate Islamic financing options for SMEs is also a gross obstacle in countries which establish Islamic banking. First, the Malaysian government has been actively promoting Islamic finance as part of its economic strategy started in Rancangan Malaysia ke-7 RMK7. It attempted to establish Malaysia as an international hub for Islamic finance because it recognized the potential of Islamic finance as an alternative financial system that abides by Islamic principles. Second, SMEs have access to Islamic financial institutions. Islamic financial institutions provide SMEs with access to funding and other financial services that are specifically suited to their needs. These institutions provide additional financial services such as Islamic leasing, equity crowdfunding, and venture capital to aid the development and growth of SMEs. Third, reputable institutions that offer initiatives and programs related to Islamic finance. International Islamic University Malaysia (IIUM), which is an organization that is essential in advancing Islamic financial knowledge and practices both within Malaysia and internationally. Specific programs and initiatives are offered by IIUM's Kuliah of Economics and Management Sciences to meet the needs of SMEs in recognizing and utilizing Islamic finance opportunities. In conclusion, the development of SMEs in Islamic-based transaction can be clearly seen in comparison to when it was not implemented in a country. Everyone will be able to benefit from it, and of course, there must be challenges in implementing something that is beneficial to the people. However, we should look at the opportunities coming from it. We believe one day in the future, SMEs in Malaysia will fully adopt the Islamic-based transactions and continue to develop.